we saw Moody's downgrade the US debt rating. Now, that wasn't itself a big surprise, but we have seen a reminder that actually, from a financial market perspective, debt and deficits matter. Welcome to Key Points for June. This month, we take a look at the tariffs and the fact there seems to be some constraint on the more outlandish tariffs that have been proposed. We turn our attention to debt and deficits and what financial markets are pricing. And we look at the equity bull market and ask, can this continue? Now, turning to the first point around tariffs, in the last month, we've seen some significant changes taking place. We, of course, saw the agreement, at least for now, between China and the United States, removing some of the most penal tariffs, still running at about a 30% rate, but a lot lower than the 145% that we had seen. Now, importantly, we think that's going to have an impact in terms of growth. We don't think there's likely to be the same risk of recession that we had seen perhaps a few weeks ago. If you look at the chart that I'm showing you here, you can see that we have moved back down from some of the peak concerns around US trade policy. When we had that apparent lock-up in terms of negotiations, we have moved down, and as a result of that, we think that has moved some of the risks around both financial markets, but also it has reduced the risk of a US recession. And if you look at our growth forecast for this year, yes, we think global growth will be below trend levels, but not massively so. So that's quite encouraging. And as you can see, we are expecting a modest recovery as we get into 2026. Now, turning to our second point around deficits and debt levels. Financial markets recently have become obsessed by those, and perhaps quite rightly. We saw Moody's downgrade the US debt rating. Now, that wasn't itself a big surprise, but we have seen a reminder that actually, from a financial market perspective, debt and deficits matter. The chart I'm showing you here is looking at 30-year government bond yields for the major economies, and you can see that since the pandemic, when debt levels were rising appreciably, investors have demanded a higher yield in order to lend governments money. Now, at the level we're at today, we think we're pretty much at kind of the peak level, at least in the near term. And actually, as we go through the months ahead, we suspect that these 30-year bond yields are like to moderate a bit. It is still a reminder that governments have to at least deliver in terms of trying to reduce some of these deficits rather than just speaking about them. But nonetheless, we're beginning to see the financial markets, I think, impose some discipline on some of the key governments in order to start focusing on this once again. That's clearly important. Now, turning to our third point. Last month, I showed you this chart of the S&P 500, and I was asking the question then, was it going to run out of steam, this rally that we had seen? We were getting to the resistance levels of these moving averages, and the question was it going to pause or actually decline? Now, what we've seen actually is that it has moved farther up. It's powered ahead as investors have bought into the notion that some of the tariff risks have been diminishing. Now, this may well continue for some time longer. There's no doubt there is momentum there. I think a lot of institutional investors have been closing short positions, but there's still risks. The risks are still high. We're seeing that actually revenues were likely to be impacted by some of the tariffs that we're seeing, and also margins are likely to be squeezed. And as a result of that, I suspect that investors shouldn't be paying the same multiple for US equities that they were perhaps back at the end of last year. So yes, it looks like there's momentum is there, but I suspect still a note of caution is warranted. Investors perhaps have just become just that little bit too sanguine. Remember, as always, you can read the full report on our website, and I look forward to again speaking to you next month.